Hey guys, welcome back to another video by Fully Informed Trade, or FI Trade for short, knowledge for everyone. My name is Alex Cho, and right now I'm going to be talking about the GLD. And basically gold is running into that 20 and 50-day moving average right here. And I think that it could potentially pull back from this area depending on whether or not it's able to close above or below it. The main reason why I'm kind of a little not really a pessimist, but a little cautious on gold right now is that it kind of reacts favorably for a couple sessions whenever the dollar strengthens, and then the gold gets parity with that. It also goes up, but then sometimes when the dollar goes up, gold just falls by around 2 or 3%. So, for me, gold is a really hard trade. It just seems to be really volatile, and it is not as predictable when it comes down to correlations as silver is. But again, if you guys want to trade gold, that's fine, but I really wouldn't touch it right now until I figure out, the general direction of where this thing is going. And you're not going to be able to determine that very easily, or a trend-setting move, until we're able to finally break down below this trend line on the bottom end, or break above this trend line at the top end. So these two factors are very important. Right now we're at the center, and generally speaking, when you're in the center of a channel, the 20 and 50-day moving averages are usually in the center. And when a market tries to break above the center trend lines, usually it fails, and sometimes it succeeds. But if it succeeds and closes above this, it goes to the upper channel. If it fails, it pulls back and goes back to the bottom channel at around 150. So watch this throughout the overnight session. It's going to be very important. I think it's pertinent to watch out for this 20 and 50-day moving average. I think it's resistance. I think that there's a pretty decent possibility gold will eventually pull back from this area. Of course, once it starts to pull back, you guys could set up a position, but you don't necessarily have to put up a position right now. It's not beneficial psychologically, and it's certainly not from a profit percentage standpoint either. So just wait for it to pull back, maybe down to maybe around 153.60. Then it becomes pretty obvious this market can't get above that 20 and 50-day moving average. You set up your short position or your sell position, depends on which market you're trading when it comes to gold, and then you ride it to the bottom end of the channel, and then you close your position. So anyway, that's just what I think I see. That's just what I see in gold. If you guys have any questions, leave a comment right below, and I'll be more than happy to try and answer some of them. And I hope you guys make money every single day of the year. So I'll see you guys around.